Hello, ladies and gentlemen. Today we are doing our portfolio update for our M1 Finance account. So let's go ahead and kind of break some things down and take a look and see how we have been doing, some of the different things that have changed just slightly, and then also kind of get an estimate of what our dividends are going to be for this coming up month. And first and foremost, we can see over here our total that we're sitting in our account is $425,815. I believe right now you can see here from some of our high points, this is obviously had gone down over the last month just a little bit. If we look over the last 3 months, we can see how we've been doing. We're up about 8% on our money weighted return here. And then if we go over to the last year, you can see over here, we are up almost 40% as a whole. So yeah, a year ago, we were sitting at just over $250,000. So it's huge increases over the last year. And then if we go to our all-time, obviously you could see the chart has significantly increased here for its overall size. And I do like to show this, that at the beginning of this portfolio, we started with 100, did $10 a week until we got more comfortable and kind of continued to move up in the process as we started to earn more, as well as getting more comfortable and understanding of how we wanted our portfolio to get laid out. Now, I'll go over some of these other things as well too here. I'm going to switch back over to, let's just say year to date so far, and just talk about some of the things that have been going on in this portfolio, as well as like I said, the dividends that we're earning for this upcoming month. Now, the biggest thing I would say with this portfolio is that we haven't really been doing a lot of activity here, and I'm going to go ahead and show you with our deposits here. So you can see here, as of this recording, we're kind of in February 10th or so. Yeah, I was like, I didn't know the day. I couldn't see the time. And so right over here, you can see February 5th was a couple days ago. Very small amount because I was doing some tutorial stuff on my other channel. And then, one time so far in 2025 outside of that. And then you can see this huge gap between August and January. And yeah, I know it's still good to be investing even when the market is going up or down. But at this time, I was honestly slowing down quite a bit for multiple reasons, one of which was how quickly the market was moving upward. And so I got a little bit more on the reserve side of like holding onto that funding. And so just one kind of quick update there. I've also sold a little bit on some of the companies that I have been holding, not entirely, but I have. And I'll actually show you that as well too. Can I do trades only? I think that went through, right? Yeah, okay. So that went over. And you can see I did a sell here on February 4th, and I used that money to actually just go ahead and reinvest right back in. And then I did a sale sounded weird. I did another sell. Where was that? Trying to go find it. Oh, right here. On November 15th, right over here for about $25,000, which now that money is just sitting in our savings account, earning at least 4% interest APY here on our M1. And I would say I'll kind of go over why I ended up selling some of that. Obviously, I'm not really one to be selling all the time just because the intent of this portfolio is to earn income over time. If I actually go over to my dividend portfolio spreadsheet over here, so I fill in all my dividend income that I make every single month. And the goal here obviously is to earn a really good average every single month. Obviously, some months are going to be zero, like you could see here. In January of 2025, we didn't make anything because none of the companies we hold paid out in that time. But right now in February, we're estimated to make about $200, which is actually a little bit lower than what we made last year. But that's because we sold out of Texas Instrument last year. And I think that's going to be that biggest drop there. But I think after that, we should be quite a bit more steady with how much we're making, plus the dividend increases that are going to be coming over the next couple of months as well, too. So I'm trying to look at like making this a little bit more stable for us. Obviously, there are some companies in this portfolio. If I go to my holdings, if you have already been following, you might know that there are some companies in here like SoFi or even Airbnb that don't actually pay out a dividend as of this recording. I know, and same thing with Amazon. But I do know that companies like Meta and Google, who at one point, while I started buying into them, were also not paying out dividends, but now they do. So something like a Google, the yield on costs since I started buying in is a really good yield for me. And obviously, if you're buying in right now, the yield is going to be much lower than where I was, as well as the increases that they're going to be making is going to be significant. So I'm trying to debate on if I keep on holding on to these companies until that situation happens, right? Because something like a SoFi, having 4,600 shares of this company, when they do start paying out a dividend, it's going to be really, really nice. But that could be years and years down the road, obviously. Rightfully so for a company like this, just because of where they're at. They're really on a growth trajectory more than they are on just kind of stabilizing. So that's pretty much okay. But also at the same time, I'm like trying to build up, that dividend income to be really healthy in the next couple of years. So taking some considerations, like I said, Airbnb is another one of those companies. And if I actually go to my activities, I'll go to my sell here. I did sell a little bit of my Airbnb. So I still have a little over 100 shares, as you saw earlier, but I took about $5,000 out, and then I just reinvested it into a couple different companies that I see a little bit more value in, with especially like dividend focus as well as their current price points. And so we had a huge drop in Microsoft over, I think, after their earnings call for Q4. So I ended up buying quite a bit of that sale from Airbnb over to Microsoft. You can see here we put quite a bit more into Google as well. They also had a recent pretty big drop as well. And then Booking.com, or Booking Holdings, I should say, I actually got into them because I've been doing a lot of research with Airbnb and I did like them as well. And then it's starting to look a lot more of like investing in Pepsi versus Coca-Cola or Visa versus MasterCard, where they're fairly similar in a lot of different ways, but Booking.com definitely has quite a few more advantages than I would say Airbnb, although I do like both companies. One, Booking actually does pay out a dividend as of this recording, and they do a lot of buybacks. So that's why I ended up putting a little bit of that chunk in there. And then I just put a tiny, tiny bit into my Ally because I'm getting close to hitting, I think, almost 500 shares, which will just be a really nice kind of round number to get to as well. So I did throw in a little bit in there as well too. So this should help, right, when it comes to dividend growth on this portfolio, because when I actually look at where I am as a percentage, it's a pretty low percentage as far as a starting yield. So ideally, I would like to get to a point where the yield does increase. So that way, when I get my dividends, right? Because if we go over here to like dividend payouts, they're looking really good. And we're taking these dividends and repaying them back into this portfolio, not necessarily into the companies that paid these dividends, because I'll see different opportunities at different times. So I want to have, this like $10 from Booking and say, okay, well, do I put it back into Booking or do I put it into other companies I have in my portfolio that are maybe at a lower performing metric at that time to get that better return? Or do I, put it back into the company that paid it out? In my case, it's usually I'm just investing all that money back into one of the other companies that's lower performing at the time. So for me, I'm looking at being able to increase this, right? Like putting more into Google. Our last payout was in December at $73.19. So adding in almost another $1,800 into this fund, plus the dividend increase that should ideally be happening, I believe, on the next payout should yield a really nice result there for us. And so, or actually not the next one, but the one after, I believe. And so that should in turn benefit us greatly because, again, Airbnb is not paying out a dividend. So do I end up holding on to Airbnb long term? I'm not 100% sure. That's obviously something you'll see here in the future if you are following this channel and kind of keeping up with this as well. So you'll see that drop right there. So right over here, our average cost on Airbnb, is $126, and it's currently at $136. So it's kind of pretty much been steady. There's been a couple upticks for a little while there, but it's definitely kind of just been in the same spot the entire time. One of the things I do like about Airbnb, if I go into Qualtrum, because I'm a visual person, so I like this a lot better than just numbers. So this one right over here, just make sure everything's on screen here for us. So this is one of my favorite things when it comes to the chart. I like companies that do not have a lot of debt. Now, if they have some debt, that's fine. But I do like companies when I see their cash is obviously greater than their debt overall, or at least their debt is within reason for that as well, which is one of the reasons I sometimes struggle with Home Depot. Because when I go into Home Depot right over here, we'll see here the difference. So look at the cash and debt. Let me kind of drop this down to like a 5-year time period. Like it just keeps going up and to the right over here. And, that to me, it's not something I personally love. I get a little weary on that overall, just because you start getting compressed so much with what you can do as a company when you have that much debt versus a little bit of debt, or maybe getting out some debt temporarily to be able to do some kind of investment. So that's kind of my worry there. And if you look at their revenue over that same 5-year time period, it's been some growth obviously here as well too. So it's not the worst thing to be also increasing your debt as your revenue's been going up, but Again, not something that I'm like the biggest fan of to see in the companies I do hold. So Home Depot is one where I'm a little cautious with, where Airbnb does have the advantage of not having a lot of debt, but still it wasn't paying out a dividend. It definitely pay out a dividend in the future as well too. But in the meantime, putting it more into my booking holdings, which I don't have a lot of shares because it's obviously a huge price point, but having 1.3 shares for something that cost, what is it? Nearly $5,000 per share. Not too shabby. It's a small portion of my portfolio, earned a few dividends here. And then again, because they do a lot of stock buyback, that's also a really good advantage for me as well too for the long term. So those are just some of the different changes. Obviously, I had mentioned before too that other big sale. Oops, I keep jumping around. I do apologize. So the other big sale that I did back in November. Let me go back there. And I had shown this already at one point, but it was with our SoFi right over here. And part of the reason I did that is the enormous jump that it had in the middle of December, or November, I should say, was not alarming to me, but it was definitely something where I was like, hey, I wasn't expecting this for quite some years to kind of get to this point, or even months at that point. So, and there was actually some need for some of this funds. So I actually just decided to sell a small portion. You saw I still have like 4,600, 4,700 in this account. I actually have a little bit more holdings in my Robinhood account as well. So I'm not too worried about having sold some of that off, but knowing that like in the future, when they do start paying out a dividend, they are technically a bank. So eventually that can be the case. And if that's going to be what happens, having this many shares is going to be something that looks really good on our dividend income sheet, even if today it doesn't show up, because obviously they aren't paying that dividend. So it's one of those things where, we'll see if it ends up working out in our favor for that. And if not, then, we'll have to readjust that as well too. So for this portfolio right now, I think we're going to be looking at staying pretty stable with where we have been over the last couple months, trying to invest maybe a little bit here and there again, because like I said, I haven't really been depositing too much into this account, but even when I have been, like back in the end of January, I've been buying a little bit of Microsoft, a little bit of Booking. And then when I did some of that sale from Airbnb, again, I bought these two companies and two others. And then if I go into my Seeking Alpha, I like looking at the 52-week range just to get a quick glimpse of where my companies stand. And I kind of do this little thing where I go down the middle on my 52-week range as best as possible and say which of my companies are on the left side over here and which companies are on the right-hand side. And then whichever ones are on the left-hand side, I just take a better look at them versus if they're at their 52-week high, I'll still take a gander at them. But sometimes if they're already at their peak, if their PE ratios are already pretty high up there, I'll kind of, take a step back and slow down on investing with them. So for these companies, this is where, obviously I saw Microsoft is below that bar, right? And then we saw Booking, it's back up a little bit more. But when I was buying just a couple days ago, it was a little bit closer to that middle point. And so I want to take advantage where I can with the investments that I have based off of where obviously I see them going, based off of their earnings reports and, what they're expecting to do over the next couple of years as well too. Because if I recall correctly, if I go back to my valuation tab here too, if I look at their PE ratios on all the companies that I have right over here, so this is, that was a terrible line. Hold on, let me just do this. So this is the forward PE ratio with all the companies that I have currently. And obviously you could see some of these companies are well above in some of the places. Obviously this is Ally, so it's a bank, but then you could see even Amazon or like Booking. And then you start really questioning like, okay, where's the best value in this portfolio? And you start saying like Google. Obviously, Booking kind of got back down there over the last couple of weeks. And then Microsoft definitely came down a little bit from right over here. And then there's also even Meta. So, obviously we can go back and forth with looking at the different, ranges at the PE ratios to make these decisions. And if you're a little bit newer to investing, obviously that can be a little overwhelming at times, which is why I always recommend like, hey, just get started, get an idea of like what you like and what you don't like as far as holdings and your portfolio and what it looks like, because that's what I did when I started this account, right? I just started off with a small dollar amount, kind of played with things a little bit to try to get a better understanding of how I want things to look and have my stuff structured over here. Obviously this is with M1 Finance, but depending on which brokerage you use, you can set up your stuff to look a certain way or organize it in a way that works best for you, which this works really great for me, having multiple different types of slices so I can keep things organized a little bit better for my visual appeal that I like to have in my portfolio as well too, which If you do want to check out M1 Finance, I will always have a link for you in the show notes down below. It's the portfolio that or brokerage, I should say, I personally utilize. So you guys can go ahead and check that out and get started with investing on your side as well too. Now, one of the last things I would want to say that I'm doing right now is because I have slowed down on actually investing in this portfolio. That obviously doesn't mean I'm not reinvesting my dividends as well, right? I had showed you from earlier, when I get my dividends, I'll actually reinvest them back into the portfolio. And I was looking at how much I'm getting paid for this month. I haven't gotten any of this money right here. This is just estimated that I added to my tracker here of $200.89. This money is going to come in, and I'm most likely going to continue to invest it in companies like Microsoft, Booking Holdings, and what was the third company that I had? Probably Ally, to get close to that 500 because that price point is still really good. And then I'm like drawing my blank on the other company that I was going to be continuing to invest. Oh, well, I did say Google already. Yeah, so that's actually going to be pretty much the main companies I'm going to be investing in over the next little time period as I'm earning those dividends as they come in, because that's from 3 companies. I believe it is, if I'm not off the top of my head, it's Ally, Apple, and Costco. I'll do a full video once I do get them officially paid out, but I believe those are going to be the 3 companies. And then obviously in March, that's when we usually see our largest payouts at the end of every single quarter. So obviously I'll do a video on that, and I'm hoping to hit over that 336, which again is just going to consistently get reinvested into the portfolio, because that's what compounding does for a lot of investors, is that it really helps amplify things a lot more for you, which is always a great thing to do as well too. Now, any of the resources or websites I use today are always going to be in the show notes down below. Some of those are affiliate links, which help me out as well when it comes to you going through the process of signing up with them. And what I'm going to also do is post a video right over here on screen for you, so you can actually keep on watching with some of my latest videos when it comes to my portfolio and dividend investing.